Hey everyone, Supermicro announced the 10-for-1 stock split that has investors excited about the AI stock on the split adjusted basis. So I'll share with you what this stock split could mean for Supermicro investors. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so Supermicro's board of directors has authorized a 10-for-1 forward split of its common stock, and they expect trading on the split adjusted basis on October 1st, 2024. So the company will be splitting their shares 10-for-1. So what does this stock split mean for Supermicro stock investors? Well, they're just going to split their shares 10-for-1. What that means is if there were 100 shares outstanding before the split, after the split, there will be 1,000 shares outstanding. If the company was earning a pre-split earnings per share of $100, after the 10-for-1 stock split, the earnings per share will be $10. Overall, if you look at the total earnings, right, total company-wide earnings, they do not change. You can see that total earnings before the split were $10,000. Total earnings after the split are $10,000. So the earnings do not change. You're just splitting them up into smaller pieces. Now, I've talked about this before on other companies that have announced the stock split and why it makes no difference to investors when the company does a 10-for-1 stock split. Now, it might make the shares more affordable to more investors and thereby granting access to some investors who are not able to buy these shares before the split. And so it's good news for those investors that wanted to buy Supermicro stock. However, many brokerage platforms allow for fractional share buying. So some people were already able to buy Supermicro stock on a fractional basis, even if they couldn't afford the full several $100 share price. So this will only help those individuals who wanted to buy Supermicro stock, who could not previously afford to buy Supermicro stock, who also did not want to open an account at one of those brokerages that allowed for fractional share buying. So those are the individuals that this stock split really means a lot for, because now they can afford this stock. However, in the broader scheme of things, it's not that big of a deal for Supermicro. It has no change on the company's financial prospects, no change on revenue, no change on profit, no change company-wide. So you might say, why does a company do this? Why do they do a stock split? Well, because it creates excitement for shareholders. Shareholders or investors get excited about stock splits. They don't completely understand what a stock split means. There's a lot of misconceptions around stock split and how a stock split is going to cause the stock price to go up. And so that's why companies cater to that, right? They understand that it creates a lot of publicity, it creates a lot of discussion around their stock, and they want to be helpful. They want to cater to those investors who want the 10-for-1 stock split. They want to cater to those investors who maybe previously couldn't afford to buy the stock and didn't want to change brokerages. They want to be helpful to those investors as well. Additionally, it broadens out the shareholder base. You attract more shareholders if you have a lower stock price because more shareholders can afford to buy, and so more shareholders will buy. Now, all of that being said, it's not a reason to have a stock price increase. Now, I had this very similar argument and I made this very similar case when Nvidia split its shares a couple of weeks ago or a couple of months ago. I had this very same discussion and there was a lot of pushback on the Nvidia stock split. There was a lot of people in the comments section. I got a lot of emails telling me that I didn't know what I was talking about, that the stock split is going to cause Nvidia stock price to go to the moon and all of that stuff. And you can go back and see the comment section in that video. And to be fair, I've had Nvidia stock rated as a buy and I've been bullish on Nvidia stock, but the case I made in that video is that the stock split is not any reason to buy Nvidia stock. The stock itself is a good value, and before or after the split, it's a good value. The split is no reason to buy Nvidia stock. And you can see here a chart of Nvidia's stock price, and you can see where the stock price was when it split its shares at around $120 post-split. So this is split adjusted. And sure, there was an initial lift of the stock price immediately following the stock split. But since then, Nvidia's stock price is down meaningfully, down over 20% since the stock split. So the split alone is no reason for a stock price to move up or down. It, like I shared with you here, it doesn't cause any change in the company's profitability. And so it shouldn't cause any change in the company's valuation. All it does is create some trading around the stock split because newer investors come in, and when newer investors come in, they bid up the share price of the stock, which then causes some older investors to sell because now that valuation of the company's stock increases for no reason other than a stock split. So profits have not increased, but the stock price increased, and so the valuation becomes more expensive, and so some older investors sell, or some previous investors sell, and they make room for newer investors to come in. Overall, the share price doesn't increase because of a stock split. So it's just a different way of slicing up shares. It's like taking a bigger slice of pizza, and you take that one big slice of pizza and you cut it into two slices. You have the same amount of pizza, but they're now cut into two different slices. Would you be willing to pay more for that same amount of pizza now that it's cut into two pieces? Maybe a little bit more because it's more convenient to have two slices of pizza instead of one bigger slice. But not that much more, right? You're not willing to pay that much more because somebody cut your slice of pizza into two instead of one pizza. You're still getting the same amount of pizza. What's important to you is how much pizza are you getting for the price that you're paying. And so with the stock split, all it does is cut up your pizza into different slices. It doesn't change the overall amount of pizza. And so you shouldn't be willing to pay more or less because of how that pizza is sliced. All right, so this is important for a stock split because the liquidity in stocks are so large that cutting them into smaller pieces doesn't change the liquidity all that much, and so it doesn't add all that much value. This would be different if we were talking about real estate. If we were talking about a single family home that might be worth $1 million, and the individual that owns that home would maybe want to sell a small slice of that equity in that home, but they can't. And so for that individual that owns the $1 million home, splitting that into smaller pieces, financially speaking, not the house itself, would be beneficial. That would be a big value add. And so you might be willing to pay for that type of liquidity addition. But with the stock split, especially for a stock that's already pretty liquid, it doesn't add all that much value. So what does this mean for supermicro computer stock investors? Well, if you're one of those investors that previously could not afford to buy supermicro computer stock and you now can afford to buy it, you have that benefit. For everyone else, it should be no change. It's no change to the company's profits, no change to the company's sales. It means close to nothing for most investors. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.